This week's precious metals market update. Several things. First, we have the French election. Maria de Le Pen, the female that is wanting to possibly exit the European Union and go back to the French currency, is running second, which hopefully she'll get into the runoff. And but until next week, the elections later this week on the 23rd of April. So we'll be watching that closely. If she were to go in, it would be a huge boom for gold. But first of all, the socialist candidate still is leading. Of the five that are running, there possibly a runoff 3 weeks after the election on the 23rd. So we'll keep close tabs on that. The big SWIFT system that has been the payment system throughout the world for decades, it now looks like China and Russia will have a SWIFT system that could be operational in the very near future. This would be terrible for the U.S. dollar as less and less money would come through the U.S. systems and would go through the yuan currency in China. We've also seen the first quarter's growth figures running at 6%. You know, here we've gone 8 years. We haven't even had 1 year of 3% growth. And China's complaining because their growth is only 6%, and we continue to send them U.S. dollars through trade deficits, and they continue to buy the U.S. They continue to bring that money back that we send, over $10 trillion since 1971. So right now, the picture is also waiting to see what Trump's going to do on taxes, or a better statement would be what he can do, not what he wants to do, but will he get tax cuts corporately first and then individually second that could cause a boom in equities. But remember, bonds are a no-no. Bonds after 35-year bull market, it looks like it's over. We've seen a sharp drop in securitized debt over the last several months since Trump was elected president. So stay clear of bonds because we see nothing but rising interest rates for the foreseeable future in bonds. So watch that and watch it closely. So really not a whole lot new. We continue to see the central banks and the purchases and Eastern don't have anything to do with the U.S. We're so not buying gold. We've seen a downturn in demand, and yet we see the dollar going down, which is the number one reason to buy gold. If you look at it historically, every 1% the dollar goes down, gold goes up 11. So watch this and watch it closely, because if the dollar that's dropped from 104 down to 100, about 3.5% this year, we've seen gold up 12% this year, and we still, after what Trump said last week, he says the dollar must come down where we can compete in world trade and help U.S. corporations. So we've got our own president wanting to drop our currency in value. So overall, it's an all-out go to be adding to your precious metals portfolio at these prices, because we expect they're going to be quite a bit higher as the year wears on. If you're interested in a precious self-directed precious metals IRA, you contact us. We'll be happy to walk you through that. You can reach us at 800-247-2812. That's 800-247-2812. And Dan, Kathleen, and myself will be happy to help you walk through that. But I actually had a meeting this morning with 2 money managers, and we're seeing them allotting more as a percentage to the precious metals basket. So I think you're going to see that continue to expand as the year goes on. And once again, watch the SWIFT system. That will be very detrimental to the U.S. There's also strong rumors that China will use their special drawing rights to beef up their gold holdings as we move more toward a gold currency backed by Russia and China. So hopefully we'll continue to update you on these situations. And lastly, if you do need us and you don't have our storage brochure, we have the best storage programs in the world today in either Canada, US, Cayman Islands, Singapore, or New Zealand. Give us a call and we can explain that to you. Lastly, you can reach us at 800-247-2812. With this week's Precious Metals Market Update, this is Tom Cloud signing out.